What's going on, everyone? My name is Nicholas Merton here at Data Dash, and today is November 27th of 2019. Well, folks, I hope you are having a fantastic day wherever you are, and in today's update, we've got a wide range of topics to focus on. We'll be taking a look over cryptocurrency markets, as well as talking about a pretty large hack out of a South Korean exchange in the cryptocurrency space, and then also taking a look at some traditional market data for China, asking whether or not the giant is continuing to expand or experiencing some signs of slowdown. So we've got lots to discuss. It's all coming up right after our quick sponsor. Our sponsor for today's episode is Exodus.io. Exodus is one of my personal favorite cryptocurrency wallets. It's not only supported on both desktop and mobile, allowing you to sync your wallet across multiple devices so you can have access to your funds anywhere at any time, but you can instantly exchange over 50 different cryptocurrency assets directly from your mobile phone. There's also interactive charts that let you view the price history of a specific asset or your portfolio's performance over time. Check out the link down below in the description and download Exodus for your mobile phone and desktop computer today. Alrighty, everyone, so let's go ahead and start by taking a look over cryptocurrency markets. As you can see, over the last 24 hours, most cryptocurrency plays are to the upside at the moment. Again, a good amount of players entering into a no trend scenario, but a good amount of plays as well stepping into the 3 to 5% territory, starting to gain some market cap here as Bitcoin has upticked over the last few hours. We can see here that market cap has gone up about $3 billion since we last spoke. Nothing too significant, and again, what I want to see here over the next week is us holding around this $200 billion range, really solidifying this as support. So I would give a range of around $205 billion to $195 billion, that $10 billion range there, where we could see valuations fluctuate. So long as it holds in that range, it's going to look really good to me. I don't want to see any divergence breaking off where we're going below 190 billion, something like that. And it might be good as well to hold around this range before you really start going up towards 210 or 220 billion over the next few weeks, right? I want to see it hold at this range, make it support, and show that it's a clear higher low in this case from the $100 billion, a 2x from that previous low back in December of 2018, right? We're coming up on a year in this case, so it'd be good to see in that case that we set a significant higher low in valuations. Now, outside of that as well, in the sense of market dominance, Bitcoin not really gaining too much, but also we're not seeing any gains in altcoin dominance at the moment. The thing we're looking for here is for Bitcoin to set a higher high in the short-term relative highs that Bitcoin dominance is set. We are not near that just yet. We're a few percentage points away. I'll let you guys know if we're getting close to that and to keep an eye on it. But again, it's something we're watching for here. Now, before we dive into actually taking a look at price here, price, as I mentioned, has been upticking over the last a few hours pretty strongly with some good volume, and we'll take a look at it in just a moment. I want to go ahead and talk a little bit about this news out of South Korea. Now, for those of you who have been in the crypto space for some time, UpBit is not a unfamiliar name. It's one of the largest cryptocurrency exchanges on the market by volume and by users, and they just recently had an abnormal hack of $50 million worth of Ethereum. And they're supposedly seeing this, again, I'm not saying UpBit is claiming this, but a lot of people who are analyzing it, as we'll get into in a moment, see this as somewhat of an inside job rather than someone externally breaking through the security of their cold storage, okay? So let's go ahead here. Again, just to put some context into it, there's 342,000 Ethereum that were supposedly stolen in this exchange hack. And the good news is, just to kind of clear up any FUD or fear, supposedly UpBit is going to be covering the assets. In this case, they're going to be covering this loss. I really don't get how exchanges, just keep allowing this to happen. And I'll kind of make that my point here. But again, they've got the funds for it. Obviously, these exchanges are printing money 24/7. They're going to be covering the loss, which is a good move in this case. Bravo to them. I think that's a good move, right? But again, this speaks to another fear here that I have with centralized exchanges, and it's actually a bigger fear for me than exchange hacks, because it's similar to what we saw back in Canada with the exchange hack that led to millions of dollars of crypto being stolen and likely going to a CEO who faked his own death. And long story short, right, just to kind of explain my fear here, I fear that there's much more incentive for someone who operates the cold storage system of these companies, the people who run these exchanges, to run away with the money, especially a censorship resistant form of money, than having, a risk of someone externally stealing crypto, right? Because it's not only a fear when you have all your crypto in one spot because people see the honeypot and they want to get a piece of it, right? They want to be able to get some of that crypto, and usually they'll not only be able to walk away with a good chunk of it, but sometimes all of it, which is not good. But outside of that as well, there is the fear that when there is enough incentive for an exchange in this case, when they're not generating enough fees and they have a diminishing amount of wealth that they're holding because people are withdrawing. That's what happened in I'm blanking on the name right now, the Canadian exchange that had the exchange hack a while back, right? It'll probably come back to me in a moment, but you guys get what I'm saying. When there's enough incentive for someone to run away, if they know that their business is not growing, that they're not getting new deposits, and their fees, right, the fees that they're generating, basically the trading activity is diminishing, they have an increased incentive to walk away with the money, right? And I'm not saying that UpBit as a company did this. I don't want to make any blanket claims. But again, this is a concern that there is internal fears just as there is external fears when it comes to centralized exchanges, right? When you have everything in one spot, when you give them the trust of your keys, right, for the convenience of being able to trade and being able to make cheaper transactions, you're putting that risk. You're absolutely putting that risk. And if you're not using plays that are highly regulated, that are highly led by oversight and regulators in this case, that will punish companies that do bad things, you might have another thing coming to you. That's the concern. But the interesting thing is that it's had no effect on price. And I think we've talked about this before, even after the Binance hack. It's funny because if anything, an exchange hack is going to boost price, and the reason why, on a fundamental sense, is because you're likely removing coins out of circulation. The users who are hacking this, whether they are internal or external at the exchanges, are actually, at the end of the day, removing coins out of the supply, because it's likely that in many cases they won't be able to liquidate that crypto unless they find some anonymous outlet or an exchange that doesn't do KYC. So plain and simple, either they're going to use those coins in commerce, right, to buy something, or they're not going to use it for anything, and they're just going to hold it and hope one day that they have an outlet for it, right? So I don't think that's the reason here. I think, the buy-side activity we're seeing in the market is simply just because buyers are coming in right now. We did see a nice move up here over the last few hours of about $400, right? Seeing price hold up here around nearing 7,300 and taking us back to where we were over the last 24 hours, right? So good to see. And any kind of sell-off we were getting from the Korean exchange news is no problem for Bitcoin, nor is it a problem for Ethereum. Take a look at ETH here, right? We'll take a look at the USD chart. We can also take a look at the Bitcoin as well. ETH doing fine, right? I think it's probably a little bit down compared to Bitcoin here over the last few hours. But again, nothing too severe here, right? Yeah, so we haven't really broken away with the normal trend here. Still holding up relatively good from back here in September. It's still looking like Ethereum does have a fighting chance to continue moving higher comparative to Bitcoin as we started to see Bitcoin lose some of its market dominance. But again, that's what we'll be watching for here over the next few days. Then I might as well go ahead and just show you guys, because we have the chart up here. This is what I'm looking for here, right? Want to see if we can set a higher level than some of the significant highs back here. So for us, that would be getting a close probably around like 71 in this case for Bitcoin dominance. So, about 2 points away, a little over 2 points away from this point on. Okay. So anyways, I want to take a look at a little bit of data science before we dive into taking a look at the China economic data. So I always like to come back to this indicator and take a look at the HODL waves. So the HODL waves basically take a look at the UTXO model for Bitcoin and looking at transactions and seeing when they were last spent, right? When they were last realized or utilized in some sense. So if you actually take a look at any of the general timeframes here between, I like to look generally for anything over a year in this case, if for the amount of transactions that have not been spent for a year. Well, between the top blue band up here and the lighter shades down here that lead us all the way down to the 12 to 8 month unspent transaction outputs, basically Bitcoin that has not been spent for over 12 to 18 months, then in that case, we're actually over 50%, which is really exciting. So again, we're seeing less and less Bitcoin circulating around in this case, more people holding on to it. And again, you can always denominate some of this because some people are going to move Bitcoin to exchanges. And when it is on those exchanges, it will be registered as not being outspent in this case because it's sitting in cold storage where people are trading and utilizing it on the surface. But again, even denominating that sense that we do have some on exchanges, seeing declining exchange volume, we're seeing most people holding it in this case, right? Most people just simply holding their crypto as long-term investments. So again, I think they kind of cross one another out in this case. We've been seeing, if you take a look at the BLX indicator, right, which takes a look across the liquid exchanges for Bitcoin, we can take a look here over the monthly that there has been a declining trend of volume over the last 3 years, or excuse me, last 4 years back here since 2015. Crazy how fast time flies. We're almost entering into 2020. So, interesting thing to take into mind. Now, I'm not going to ramble on too much about this, but I want to talk about the fact that China's economy has slowed for the 7th consistent month. Now, there's a lot of things that you could put towards this to explain it. You could talk about the trade war. You could talk about tensions in Hong Kong. That's really going to hit luxury markets for Chinese exports in this case, right? So we have a lot of different things that could be playing a role into this that are weighing down China's economy. Either way, the numbers don't lie. Well, China's numbers can be fabricated a little bit, but then again, we like to do the same with our consumer price index, and I would say that GDP as well can be fabricated to some degree in the United States. China, though, is well known for their economic numbers, though. Let's just say that. Anyways, let's go ahead here. Talk a little bit about some of the news here. So the earliest available indicators of Chinese economics performance point to a continued slowdown in November. So this trend has been going on for a couple of months now. And the major thing that we're seeing right now is that much like in the United States, where we're having a decline in manufacturing, a decline in imports and exports, at the same time, we're still seeing a boost in consumer confidence, right? So the plus side right now that's actually keeping up, keeping the economy afloat is a broader consumer market. We're seeing consumers and consumer spending continuing to increase. Where at the same time in both the United States and China, we're seeing a continued slowdown or a deflation in the amount of factory activity, right? So I'm actually going to see if I can find the actual quote here. There's a specific terminology, and that's basically the deflation of factory data in this case, or factory production. I don't know why I can't find it here. Anyways, again, let's go ahead and take a look through some of the key quotes here. I think this will lead us towards the part that I wanted to showcase to you guys. So the Bloomberg economists are saying, given weak global demand and uncertainties over trade talk, China's growth has to rely more on domestic demand. However, worryingly, there it is right there. I don't know why I couldn't find it. Factory deflation. That's the term I was looking for. However, worryingly, China's factory deflation continued and deepened for the 5th month. So again, whether it's the trade war, meaning, declining demand from the United States due to tariffs and continued conflict and uncertainty, factory deflation is a symptom that's come out over the last few months in China's economy. Again, we could debate for hours as to what's causing it, but no matter what, we're seeing a slowdown in the actual overall production. And China and its economy has bolstered over the last few decades due to factory production. Could it be wage growth? Yeah, it could be wage growth. But at the same time, some people would argue that in China, even though you have to start paying higher wages in this case due to new minimum wage laws, at the same time, this is simply the place to manufacture. China, if you want to get something made, if you want to get something done, China is the place to do it when it comes to hardware and just generally, producing products of any sort, right? So I would say more than anything that yes, this does have to do with uncertainty of the trade war, because if you have to worry overnight if there's going to be a tariff on your industry, you're likely not going to manufacture something, right? You will postpone it or manufacture elsewhere, plain and simple, right? So this could be a huge hit to China's economy. And again, why it's an effective tool to bring them to the table to discuss, right? Tariffs aren't good, but it's something that gets people to negotiate, to talk, right? Especially when they get to the point where they've gotten between the United States and China. And I would say outside of that as well, I think we're just obviously entering into a slower period of time, right? Again, this is China's economy slowing for the 7th month. But this doesn't mean that we're, in this case, entering into a mass recession of any sort, right? I don't want to make it sound like we're in a doomsday scenario. China's still chugging along, right? Same as the United States, right? The economic data isn't great. The economy isn't always great for everyday people, but at the same time, it's still in the upward momentum. It's still going, right? Well, what are some reasons for this? Well, China's central bank and its balance sheet is probably not the major perpetrator. It's actually been quite neutral since back here in 2014, which is actually quite positive compared to some of the central banks outside the United States. But if we take a look here, interest rates are starting to decline. The first decline they've really seen since back here in 2015 to 2016, from down to 6 points down to 4.25, and then down here to an even lower level, heading towards 4%, if not lower. Along with that as well, if we take a look at the credit creation here, right, this is the money supply. We can see here that even though it's at a slower rate than the kind of earlier stages of the S curve here, we are still increasing the amount of credit in China's economy. In fact, if you take a look at the overall money supply that we're producing to Chinese banks, we're still seeing a nice steady uptrend here. In fact, over the last 5 years, right? I'm just going to click here just to make sure you guys see. Over the last 5 years, nearly doubling. And I think we're going to do it on the 6th year here, going on to double the amount of money that banks have, in this case, the loans that have been produced for banks. So crazy stuff. I mean, absolutely crazy stuff. The amount of credit creation that the Chinese central bank has created for private banking, entities in this case, in order to lend out to the economy. So, I mean, this has been a huge part of what's propped up the mortgage market in China. Again, the property development in China, and it's an absolutely fascinating kind of scenario here. So the general kind of point I want to make here is that with the continued increase in credit in the economy that China's created for the Chinese yuan has played a pretty big role in devaluing the currency as well. We're getting to this point where China's central bank, whereas in the United States we've seen the central bank really playing one of the major stepping roles. Stepping roles, I'm making all these weird terms. When China's central bank is playing much more of a role in stimulating the commercial banking sector, investing in the underlying economy. In the United States, we've been seeing more of a push for stimulatory growth in asset markets. And that's why the United States and its equities have been some of the best performing. Whereas in China, they're doing this in order to keep their baseline, which is to make sure to keep their economic productivity up, the factory production, and make sure that they can fight against that factory deflation, right? So again, it's very interesting to see. I'm interested to see how China's going to do this, because I think we all know the more you print of your currency, the more you devalue the purchasing power. And if you're going to do what's, been holding up, if you're going to damage what's been holding up your economy as well as the United States economy, which is the consumer, you're going to devalue their purchasing power. I think it's going to come down to hit them, to hit them in the long term. In this case, it's not going to be a positive in this case to devalue the Chinese yuan and continue injecting cheap, funny money into the economy. Anyways, I'd like to know what you guys think about this. Again, it's a very complex topic. There's a lot of different moving elements here, but I think overall, again, if you want to keep it simple, the 7th consistent month here where growth is slowing. This shows us a clear sign. When you have it over a multi-month period or a multi-quarter period, this is over 2 quarters now, we're starting to see that we might be entering into the early warning signs of a recession, right? Who knows though? Can China keep up with it? Can they avoid a recession and continue to inject easy capital into the market? Who knows? We'll have to see. That being said, everyone, I hope you are having a fantastic day wherever you are. And for those of you who are celebrating, I hope you're having a great Thanksgiving. I know I'm going to spend some time to definitely hang out with family, eat some good food, take some time off from all the craziness of cryptocurrency markets. And if you guys enjoyed this video, drop a like, leave a comment if you got something to say on the things that we talked about, whether you agree or disagree. That being realized, though, I hope you all are having a fantastic day wherever you are, and I'll see you all in the next one. Stay tuned.